Welcome back. What's going on, everybody? It's your boy Caesar, and today we're talking about Toshi. Before we dive into indicators, retracements, oscillators, and expectations, it's important to ground ourselves in context. Markets, and especially crypto markets, do not move in straight lines. They move through cycles of expansion and contraction, optimism and uncertainty, momentum and hesitation. Any technical analysis, no matter how clean or compelling, exists within a probabilistic framework, not a deterministic one. Indicators do not predict the future. They describe current and historical behavior, which traders then interpret to build conditional scenarios. With that in mind, this analysis is designed to do one thing: identify structure, momentum conditions, and potential paths forward, while remaining fully aware that price can invalidate any scenario at any time. Current market snapshot. At the time of observation, Toshi is up approximately 7% on the day. On the surface, that might suggest strength, but price action tells a more nuanced story. Despite the green daily candle, Toshi has printed a lower low. This is a critical observation because it tells us volatility remains elevated and directional conviction is still developing. Markets can and often do move higher while still expressing internal weakness, especially during consolidation phases. The recent move saw price travel from a local low to a local high, pushing directly through the golden ratio retracement level before wicking down into the 86 to 886 Fibonacci zone. This behavior is neither abnormal nor inherently bearish. In fact, it is often observed during first attempts at reclaiming key retracement levels. Fibonacci behavior and volatility dynamics. Fibonacci retracements are not predictive tools. They are reaction zones. When price interacts with these levels, what matters most is how it behaves, not merely that it touches them. Historically, when an asset breaks the golden ratio, 0.618, on the first attempt, it frequently experiences increased volatility, expanded wicks, rapid retracements. Temporary loss of directional clarity. In many cases, price will revisit the 236 retracement after an initial rejection or failure to hold the golden ratio. This is part of a broader price discovery process, not a failure of structure. In Toshi's case, price dipped slightly below the 0.786, which helps explain why resistance later appeared near the 0.382 level. These reactions are consistent with a market that is testing liquidity and participation rather than committing to a directional breakout. At present, price appears to be attempting to reclaim the golden ratio as support. If successful, this would be interpreted as a constructive technical development, though still not a confirmation of trend continuation. Short-term time frame analysis, 1-hour chart, momentum and reaction. On the 1-hour time frame, broader market conditions showed a general sell-off. Toshi, however, demonstrated a notable reaction to the upside. This type of divergence, where an asset reacts more positively than the broader market, can sometimes indicate relative strength, though it should never be interpreted in isolation. Key observations on the 1H chart include bounce off the 50 EMA. This often acts as a dynamic support level in short-term trends. A reaction here suggests that buyers are still active in this zone. MACD trending bullish. Momentum appears to be shifting upward, indicating increasing buying pressure relative to selling pressure. RSI holding bullish structure. RSI remains above bearish thresholds, suggesting momentum has not fully rolled over. Stochastics appear disorganized. This reflects short-term indecision rather than a clear reversal signal. Taken together, these signals suggest short-term bullish momentum, while still acknowledging that volatility could produce additional downside probes before resolution. 4-hour chart, mixed signals and consolidation. The 4-hour time frame presents a more complex picture. Price recently rejected the overbought zone, which typically signals cooling momentum rather than outright reversal. Importantly, price found support at the 50 moving average, reinforcing the idea that this area remains technically relevant. However, oscillators are sending mixed signals. Stochastics have crossed down, yet both lines are angled upward. MACD shows mild bearish pressure, RSI remains neutral. This combination suggests range-bound behavior, where price oscillates without committing to a trend. These environments are often characterized by false breakouts, rapid reversals, choppy price action. Nothing on this time frame currently suggests structural breakdown. Instead, it reflects a market imbalance, waiting for additional information or participation to define direction. Daily time frame, structural evaluation. The daily chart is where broader context becomes clearer. Toshi is currently bouncing from a support zone that previously held, which is a constructive technical sign. Markets often respect prior reaction zones, especially when liquidity has already been tested there. RSI structure on the daily. One of the more notable developments is the behavior of the daily RSI. RSI previously formed lower highs and lower lows, consistent with a downtrend. Recently, RSI has transitioned into a sideways structure. Historically, when RSI shifts from a downtrend into a range, it often precedes an upward-sloping trend, though this is not guaranteed. Price itself has begun forming higher lows and higher highs, which technically qualifies as an emerging uptrend. However, trend maturity matters. Early trends are more fragile and more prone to invalidation. This explains the cautious framing. The structure looks constructive, but it has not yet proven durability. Could price go lower? Yes, and that possibility must be respected. Even within constructive structures, price can sweep liquidity below recent lows, retest deeper support zones, form higher timeframe wicks. Acknowledging this possibility is not bearish, it is risk-aware. That said, the current area does present itself as a reasonable region for demand based on historical reactions and indicator alignment. Whether it ultimately holds is something only future price action can determine. Range context and overbought conditions. At present, Toshi appears to be trading within a defined range. Ranges are periods of accumulation or distribution, depending on broader context. Breakouts from ranges are typically accompanied by expansion in volatility, momentum acceleration, RSI moving into the overbought zone. The expectation, not a guarantee, is that the next meaningful push would carry RSI back into overbought territory, signaling a potential breakout attempt. Timing windows, not predictions. From a time-based perspective, there is a reasonable window between now and the end of the month or early February where momentum expansion could occur. This is based on compression of price, stabilization of RSI, repeated testing of support. Within the next 2 to 3 weeks, a resolution of the current range becomes statistically more likely, though direction is not predetermined. Scenario-based price pathways. Rather than targets, it is more responsible to discuss zones and paths. If price were to expand upward, areas of interest include 0.5 retracement level as a minimum reaction zone, golden ratio retracement zone as a higher probability interaction area. This region roughly aligns with 0.00055, 0073, though these are not price calls, only reference zones where reactions historically occur. Measured moves of this nature could represent a 73% to 120% expansion from recent lows, but percentage moves in crypto are descriptive, not predictive. Larger market roadmap, hypothetical framework. A hypothetical, not promised, structural roadmap could look like: late January, attempted upside expansion; early February, consolidation or pullback; late February, potential continuation. March, increased volatility and participation. If momentum were to persist into late February or March, higher levels such as 0.0115 could come back into focus, but only if supported by volume, structure, and broader market conditions, risk management, and invalidation. No analysis is complete without discussing what would invalidate it. Potential invalidation signals include loss of key daily support zones, RSI breaking back into a sustained downtrend, failure to reclaim mid-range levels on expansion attempts, broader market risk-off conditions. If these occur, bullish scenarios would need to be reassessed or abandoned entirely. Final thoughts. Probability over certainty. This analysis does not assert that Toshi will go up, down, or sideways. It outlines what the market is currently expressing and what conditions would support or weaken different outcomes. If you guys enjoy this type of content, make sure to like and subscribe. Hit the bell notification.